Yo, yo, yo. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! So, good morning. How are you? Should be an exciting Wednesday, not your everyday average. Not your everyday average Wednesday. So be careful. Don't just follow golden oil. There's a lot going on this afternoon. Definitely some event risk today. But with that being said, it's lucky that we have a community like this to surround ourselves with good people, keep us focused, keep us strong. This time of day, we like to align our satellites. So thank you for being here. My name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. If you are new to our webinars and to our family, please visit TradersWay.com. Open up a demo account. That's it. These webinars are totally free. And I try to design them in such a way that you learn. I want you to be a successful, independent trader that can survive on his or her own and take care of his or her own family without the need of outside help or resources. And that you will trade successfully for many, many, many years to come. And you'll have a good partner like Traders Way by your side. So please ask questions technically and fundamentally, and I'll do my best to answer them. Today we'll cover dollar pairs, yen pairs. I think we should look at Swissy, euro dollars about to flip, all that kind of stuff. Plenty of things to look at. And if you have any requests, I'll do my best to address those as well. So once again, thank you for being here. Please like and subscribe. And if you could please, let me get something. Hang on, wait for it. If you could please, come on YouTube. So all right, hang on, copy. Where'd you go? All right, if you could you please visit yesterday's video? There's the link. And leave a comment. Say hello, say thank you, say what's up. Maybe ask a particular currency pair that you'd like me to follow on a regular basis. Could you do that today now? Robinson says, why is the pound strong today? Could it be the new prime minister? A resolution to a question? Yes, all of that typically gives currency a strength. Remember, uncertainty is bad. So it doesn't matter if the outcome is good or bad, just getting rid of the uncertainty is good. So once again, guys, if you could please click on that link, open up yesterday's video, and just leave a comment. Anything will do. It'll help support our community here on YouTube, the community of sharing. And without further ado, let's go over to the charts. Guten Morgen, Ugo or E. All right, so where are we going to do? Let's start with, well, I guess we're here, so we might as well do exotics. This is where we left off yesterday. And you can see, we've hit now the monthly target. Okay, that's the conservative monthly target. That's that. So what else has happened or gone on? Let's get out of the 4-hour. Let's go to a 30-minute. Check that out. A little bit of down, a little bit of up, and that was the day. Okay. Little move to London Open. Notice how both monthly and weekly charts are still important. There's your weekly, there's your monthly. Check this out. Okay, that is a weekly trade plan. The conservative target is, we'll label it as 1. The aggressive target is 2. So based on this entry here, it actually says there could be one more little wave. Okay, but I don't know if you want to get in that today. Why would you just start getting interested in this now after it's been moving for 2 months, right? So this would be a terrible place to start selling. But all these other things, fantastic. Look at that monthly front run. Okay. There might be a little more meat on the bone, is all I'm saying. All right. So let's move over. Oh, you did your homework. Mambuso did homework. Nice. Good. The fact that you do that, 95% of other people won't, leads to something interesting, huh? All right, so what were we talking about yesterday in gold? This. So maybe this market is waiting for news to come out of the market maybe this afternoon. Okay. So Laura and Daniel says, where's gold going? Oh, well, it's the same plan as yesterday. Nothing's changed, bro. Okay. Yeah, we could look at Norway. Yeah, let's do that now. In fact, I haven't looked at Norway in a long time. Especially if I think oil is going to go up, and specifically Brent. Let me add some Noki to that. La, 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 la. Oh, la, 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 la. Okay. Isn't that awesome that that's what you get with your basic MT4 account? Isn't that so helpful? That is better. Okay. Well, against the dollar, it's weak, right? You didn't get it, Wayne. I tried and failed. Oh. Which homework was this? Was this the one where you take out one slide for one particular currency and give a 6 and 12-month outlook? Okay. So one way to, I often ask you, like, is it trending? So we can do a study. I'm just going to grab everything from the left to everything to the right. Okay, I'm just going to drag horizontally. Okay. That's what's been going on this year. So up until now, it hasn't been an amazing opportunity for trading, right? And then how about this month? So I'll start at the beginning of the monthly pivot and a little more up than down. Is that right, Barry? I just got back from Florida, so. The image is not clear. Is anyone having streaming problems? Sometimes at the bottom right-hand corner of YouTube, you can adjust the settings. So anyways, guys, you know, I look at this and I don't see an amazing move. Thank you, everybody. But I am transmitting in 1080p, Bill. Yeah, Barry, that is cool. I can just jump on a plane. Are you going to be there next week? Is that right? I'm at 720. I'll look into that, okay, Billy? All right, so anyways, the general trend is sort of like buy at the bottom, sell at the top, okay? But who was it? I forgot who asked the question. It had to do with Norway raising interest rates. And, okay, and also if oil goes up, that's good. By oil, I mean Brent. So if Brent goes up, Norway will go up, which means down. And U.S. could cut interest rates that could weaken the dollar. So anyways, you could have a trade plan based on, so today's July, or it's July now, so soon it'll be August. So your August trade plan would be this. Notice how it's just back to the bottom. It's from the median, okay, 1 standard deviation down. Yeah, Mark, you can pop your chat out. It's a setting. You have to do a couple of clicks, but it's possible. So anyways, there's the thought, okay? Yeah, I know. Actually, the most convenient cigar trip for me is, what is it called? Tampa Bay. Right next to the airport, there's a few decent restaurants, and it's all brand new right next to the airport because I think people fly in to watch hockey games and stuff and baseball games. So you can fly in. You can almost see the airport. There's like 2 or 3 new hotels, 7 or 8 new restaurants, and all that kind of stuff. And right in the dead center of the thing is an upscale cigar bar with outdoor seating everywhere. That'd be great where I could just fly in. We have cigars. I can even fly back out the same day or just stay at the AC Marriott right there. So if you want to look at it, AC Marriott next to the Tampa Bay airport. And then I can just fly home in the morning. Seb says Turkey's going to cut interest rates. Yeah, well, that's why they had to fire their central banker, huh? Yeah, all right. Well, we'll see. We'll see what happens. But I don't know if you're going to be in Tampa Bay, Barry, though. The other one would be the more interesting one, obviously, would be Miami. But I think the easiest one is Tampa Bay. I know this because I did this maybe 2 years ago. It was in winter. It was freezing in Atlanta. I was talking to this billionaire guy, and I'm like, hey, man, I won't do business with you until I meet you. And he's like, when can you be here? And I said, well, I'll leave tonight. So I flew to Tampa where he was. And he was floating around in his boat and stuff. Turns out he owns like 17 companies. Whatever. So I had dinner with him. And then he doesn't drink alcohol or smoke. So the relationship didn't last very long. But I found the cigar bar. I flew home the next day. So this is now the USD CAD. This is an old plan. This has been sitting around now for 2 or 3 weeks. Okay. So there's a concern there. Now, do you remember yesterday we talked about this being neutral? And any sort of move that comes off of here would, well, the way I describe it, remember, this isn't opinion. The way I use these moving averages, I mean, they tell me things. So this is the fair market value, and we're down here in price. So at that point, there are more bears than bulls. That's helpful information. Right here, there's neutralness, but there is downward move that we expected. Is it sellers? No. So then what could it be? Bulls taking profit. So if bulls are active, right, maybe they get back in here and they have a move up. And of course, if they don't, then this drops back into the range and we go back to waiting. Okay, but I don't think it's a good idea to ignore the higher high. Yeah, Prince says, is that common? I don't know. I guess not. Okay, so that's my thought there. But that was my thought 1, 2, 3, 4, 5 days ago. Maybe last week. It might have been here. And that's called a trade plan. What else do we have here? 21.55 up on a 4-hour. That's pretty reliable. 21.55 up, right? So you can see, based on the laws of moving averages, that's a pretty reasonable buy a dip scenario. Support, higher high, buy the dip. Okay. Now, do I want that? I actually don't want that. Okay? So I should wait. Kenneth says, does it mean we're expecting a U-turn? Well, what I'm telling you is it's already done it. Now, it doesn't mean it has to go up, but it's already made a higher high off of a bottom. Some of you guys are calling this cups and saucers, which means or cup and handle, which means you've been educated by somebody else. To me, this is called a J-Lo. Now, I didn't read about this in a book. I didn't take someone else's course. It just comes from doing FX Bootcamp for 20 years. And this is an old joke because a J-Lo is a big, wide bottom. Now, the joke is so old. And Jennifer Lopez is a lot skinnier than all the new girls of the age. So you probably say to yourself, that doesn't make any sense. But when we came up with that name, it made a lot of sense. But the bottom line is this high is higher than this high and this high and this high. And we definitely have a kickoff support. Now, is it good support? No, it's not. By good, I mean Is it like obviously, a monthly pivot or something? No, not really. And I do want to see weakness on the US dollar. I do want to see strength on the Canadian dollar. So I might just ignore it, to be honest with you. And I might let it go up and then I might sell it next month. Speaking about cigars in Florida, I bought a 15-year-old cigar. Fantastic. It was juicy like a piece of chocolate cake. And I bought it, and I was looking forward to it, and I got a nice bottle of wine to go with it, and everything's going great. And then I told my wife, hey, I'm going to go outside and smoke this. She says, oh, that sounds like a good idea. I'm like, really? Okay. Like, oh my God, this is going perfect. So I get out there, and I light this giant thing. It was like smoking a mag light. It was so big. And I'm like, get 3 puffs into it, and you hear the sky rumble. Like, what? Sure enough, about 20% into it, it's raining on me, and I'm huddled under a roof trying to stay dry, and I don't want to put it out, and I don't want to ruin it. It took 15 years to make the cigar. I'm like, oh, damn it. Dang it! All right, so anyways, let's get out of that. WTI, I do want to do WTI. Okay. Again, I'm looking at these things for macro. So when we see what's going on, like ECB, do you guys get the German manufacturing data? German manufacturing data is disastrous. Germany is the biggest country in the Eurozone. It's I think the second largest, maybe the third largest exporter on the entire planet. I think it goes China, United States, Germany. And their economy, their manufacturing economy is contracting. Oh my God. I think it came out like 45 point something. That's really bad. I mean, it's really bad. It's recession bad. They're in, if this keeps up, if they get a couple of more of these, they're in a recession. They're probably in a recession right now in regards to manufacturing. Now, the service sector could keep them afloat, but, like the United States might laugh something off like that. You're like, oh, well, but in Germany, it's more a manufacturing country than it is a services, right? In America, 70% services. But it's really bad news for Germany. So, they're already at zero interest rates or lower even. So they're going to have to do some massive quantitative easing or something. But that country's in bad shape. So guess what? The euro dollar just hit the monthly low target. But that's, if you're doing macro, that stuff should be fairly straightforward. Hey, you're selling the euro. Really? Good job. What was your thought process? Europe sucks. Whoa. The European economy sucks. So that's a good reason to probably be selling it, huh? So anyways, I'd like WTI to do that, but I'm not sure if we're going to get it. Okay. It's what I want. Doesn't mean I'll get it. Okay. Now the other one would be a hard crash and then a counter trend. That'd be cool too, but that delays things. But you know what? That's what happens in the summer. So I should almost expect that to happen, right? I should almost expect this up, down, up, right? Which means we were fighting our way up all August. That's the one I want least to happen, so that's probably what's going to happen. So Swissy, sideways, but we already know that. What was this? Oh, there's our euro dollar. All right, cool. So on the first day of the month, we were here. That cell predicts this right here, this profit taking. I am not joking. If you don't know how to swing trade, you need to know how to swing trade. That tiny little thing right there predicts this. Isn't that awesome? Isn't that just massively awesome? That short predicts take profit right there. Now the interesting thing is it's not this price, 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 it's not that price. It's this price. Isn't that amazing? Like it's literally to the pip. And now we're stalling out right here. Okay. What else do we see here? Well, this is a weekly sell zone, right? This is a weekly sell zone. This is a weekly sell zone. So down, 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 right? Up, up, sell, down, 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 so to speak. So now what? Well, if you're a bull, you have the right price. But you should probably wait for some sort of pattern, huh? And if you're a bear, the resell is right about there. Okay. This plan B is a little higher, not as good. Plan A, love it. If I'm a bear on this, I'm going to be selling at plan A, and I'm going to hold it for the month of August. Wait, it's only the third week of July. Yeah, I know, right? So for that to happen, Europe is going to have to announce a new policy to get this even weaker. Okay, now the problem is what? We kind of think dollar might weaken when they cut interest rates and they say they're going to think about doing another one. But they might just cut and say, we're done. If they do that, then dollar gets strong and this really tanks. So it really comes down to what the Fed announces. Okay, if the Fed announces one and done, dollar will get strong because too many people have priced in 2 cuts, not 1. Okay, in Europe, just Europe. So is anyone going to watch the Mueller report or the Mueller testimonies today? These are market movers. Now it'll move the U.S. stock market, and that might move the international market, is my thought. Okay. So a bull would have thought about buying in here. That'd probably be something I'd say to look for. Seems like something I would do. This is an example of being wrong, if that's the case, and you would have been stopped out. And now a stubborn bull is going to want to play it like this. But when you get a lower low, it bugs me. Okay, so I'm going to need a good reversal before it moves back up. Okay. Is it premium? Is Trade the News premium? I guess. I don't know what a premium service means. Triple Diamond is one of these services where you pay them money. They provide you an excellent service. So it's only money, Heath. That's the cool thing. Right? It's not like you have to cut a finger off or sell a child or something like that. Is it free? No. 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 Absolutely not. Nope. Jimbo had 7 on that. Ooh, forcing it on. I can see getting sucked into there. Where'd you get in here? In this period, you took another shot? I could see that. After that, I don't see any trades. But you might have been on smaller time frames, though. Right? Hey, no worries, Heath. Yes, Prince says, Wayne, is there an overreaching thinking or theory behind macroeconomics that could help develop a good market bias? That's what developing a market bias is. So you can take the course, the fundamental course at fxbootcamp.com, or you should sign up for a college level macroeconomics class. Okay. Yeah, go to a university class. Right? So like I learned macroeconomics. Now I knew macroeconomics before, but I signed up for advanced macroeconomics. I signed up for advanced macroeconomics at Harvard, and my professor was actively working at the Boston Fed as a senior economist. So he would. Did we have morning classes or night classes? I guess it would have been night classes. So anyway, so in the morning he would go to the Boston Fed and do macroeconomics, and then he would come to Harvard and teach me everything he knew. So if you can get something like that, that would be great. If you don't have something like that, then join FX Bootcamp. That's what I would recommend. Okay. Euro Swissy. Wasn't I heckled like a week or 2 ago? Didn't somebody log in and heckle me saying that this was going to go up and I was an idiot for saying it would go down? Thanks, Eli. No? One of the things I argue is like, I don't have an opinion. It just doesn't say up. It just says down. So I don't know anything. It might go up, but it only says down. Reflation and inflation. It's when you're in a market or an economy with no inflation, negative inflation, right? And I think it's typically when you have negative inflation and you're doing stuff to the economy to raise inflation back to, let's say, target. So let's say a healthy economy normally has plus 2% inflation, and your economy currently is at -1. So you do a bunch of things like, I don't know, let's do quantitative easing in a scenario like that. and you're just trying to get back to the 2%. Yeah, Raymond says, yes, there was a guy. Yeah, I thought so. I thought there was. And I'm like, this looks very bearish here, and the target is there, and we have a downtrend. Like, but he knew something. He knew something. I forget what it was. It had something to do with the central bank defending 111 or something, wasn't it? But anyways. Oops. Dang it. Did I just kill it? There we go. So what is this? Pound Swissy. Look at the pound Swissy. I'm just stable. But what's been happening here? Uh-oh. Been caught. Okay. It's been stuck here for a while. Be remiss if I did not mark it. You should always mark it. Okay. Michelle says it was 110. Okay. Makes sense. Hey, I've played the Swiss National Bank defense game before. I've played that, and yeah, I don't want to play it again. So we got a support there, and then of course the change here is we have a new government in the United Kingdom. Okay. Now I have already marked this weeks ago as resistance. So as you can see over the last 2 hours, resistance is held. How do you want to play it? Has Great Britain fixed their problems? Sab says he also said the central bank is manipulating. Well, that's what central banks do. I always laugh at that argument. I'm like, well, that's what they do. They do open market operations to manipulate the market to get a particular interest rate. That is, by definition, what they do. I hate central banks. They manipulate. Okay. Go back to the boom and bust of before central banking. You think it was bad in the last 100 years, go back 200 years. So anyways, that seems to be the trend. And I'd probably still be a seller of the pound. Now, they can take a deep breath and say, okay, we got a new prime minister. Hey, good job. Good job. Now what? Okay. So now what? Well, who said looks range? Raymond says it looks range bound. Well, that's why I go here, Raymond. Does that look range bound? So I look at this more like, so I know you're talking about down here, but let's keep this alive. So let me put that back. Let's keep that part alive. Okay. And say there's a relief rally on this currency pair, but it's still a downtrend, and nothing's changed. Like Johnson's still got to negotiate a deal, and they're still not going to want a deal, right? Right. Andrew Whittle says, but I thought that was the case years ago. Like, I'm surprised that that was the guy that was picked. But I don't know anything about UK politics. But anyways, so what do we want to do here if you're still a bear? Well, pick your lines. We already have this set as resistance. I did it 2 weeks ago. So you could still have trade plans like this. Sell high, sell the breakout. Okay. You see what I mean? So let the news come out. Remember, we don't care about news. News is irrelevant 99% of the time. What we care about is fundamentals. So the news today was, we got a prime minister, we got a prime minister. Okay, great. Good job, UK. You finally carried out an election. Excellent. Good job. Okay, but has anything fundamentally changed? Do they still have troubles doing a deal with their largest trading partner? Oh yeah, that problem's still there. Oh, well, I guess I still don't want to invest. I mean, think about it. You're investing. Let's say you had to make an investment for 15 years. You're going to have to invest $2.5 billion, whatever. You're going to have to convert it, right? You're going to invest $2.5 billion for the next 15 years, and you need to be assured of some sort of income from this because you're going to have carrying costs and stuff. So you're going to need, let's say, a net cap of, minimum net cap of 5%, okay, that you have to earn, and that includes FX risk. Okay, if you drop below the 5% year after year after year after year after year, you're going to be losing money. Okay, and so if FX risk is 3, then you're going to need to make 8. You see what I mean? And if you're making less than 8, you're losing money, so on and so forth. So now that we have a new prime minister in the UK, are you ready to make that investment in London, or are you going to consider other options? This is what people are working on. This is like business. Is that a helpful analogy? Or is that a helpful exercise to help you develop fundamental bias? If you said, oh, well, I'm not so sure I could make the net cap of 5 plus that exchange risk. I mean, if the pound falls 5% in the next year because there's a hard Brexit, then you still need to clear 10% profit to break even. You see what I mean? If the pound falls 5% plus I have, right? That would net, right? If the pound falls 5% plus I got to meet a net cap of 5%, then I'm at 0. So now I need another 5% to get to my net cap of 5% once I convert the currency. So I got to clear a minimum 10% profit per year from income from this investment just to not break even. And you're like, 10% net cap? What? That'd be like saying, guys, go out and build a bond portfolio that guarantees you, after foreign exchange risk, that you will make 10% profit. Good luck with that. You're like, bonds don't pay 10%. They don't pay 5%. Most of them don't even pay 2%. Well, then maybe you're expecting too much. Okay? So then they don't put their money in the UK. So long story short, you got a new prime minister, good job, sell, sell, sell. Where do you sell? Resistance. Where's resistance? Oh, I don't know, that area I told you about 10 days ago. That works. Okay, it's also a weekly M3. Okay. You know, notice too, if you're using pivots, that we're not talking about here or here or here or here, right? We're talking here. That might have influenced somebody to get out. Don't you think? See how it went over just maybe two pips? There were orders sitting there already. You have to think about it that way, guys. There were sell orders sitting here because it was instant. It was literally instant. We had this giant green candle, and it didn't even go 1 pip higher. See what I mean? That means, because if it went a little higher, you would have a wick, right? This is a little bit higher, or it went a lot higher. It would form a wick. So what does it tell you when you see a candle with no wick? It didn't go up, not even for a millisecond. Price went up, touched it, went straight down and reversed. So what does that tell you? What's the message inside the candle? There were sell orders sitting there. That's not profit taking. That's people being forced out of their trade. Why were they selling there? Well, that's an M3. I've taught you 100 bajillion times that that's where you sell. And we also knew this 10 days ago. We identified this as a resistance, aka a sell zone. So while amateurs were freaking out on the news and scalping long, what were the professionals doing? Shit, they probably had those trades there a week ago. Okay, so now what? Now you're in the middle, so some people are going to want to buy this, right? Selling there is not typically a good idea. Maybe you get it down to here, but it's going to want to go back up, and then it's going to want to come back down. Okay, but the message here is people had trade plans in advance. And that wasn't retail amateur traders reversing the pound Swissy. That's institutional money, because it happened, right? It didn't go 1 pip. It didn't even go a 1/4 pip higher. So that's institutional money. People that know what they're doing had that planned out, not minutes or hours in advance, days, maybe weeks in advance. The only thing that news did was pop it up into the sell zone. Okay? So I want you to think about all of this. Okay? I want you to think about that. Is that the type of trader you want to be? Did you have that marked out when I marked it out last week? Or when I mark things out like that, did you ask, like, Wayne, what does that mean? I don't understand what that means. Oh, well, in the future, when we rally up, we'll hit a sell zone, and you're going to want to sell. Down, 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 up, up. Here's the sell zone, right? Right. Of course, this one I'm neutral on. So, well, actually, I shouldn't say neutral. I want dollar to weaken. Swiss franc getting strong. That's not something I really want, but I think it might just be European currency related. Okay, so like I want to buy like Aussie yen, I want to buy like CAD yen, I want to buy like Kiwi yen, right? I want to sell like Euro Lira, I want to sell Euro ZAR. You know, these are the things I think about in this situation. And with the weakness here and here, and then of course you could carry all this out, pound something, right? Weakness in the pound, weakness in the euro tends to create strength in the Swissy, so that you would get Euro Swissy, right? Pound Swissy down, Euro Swissy down. But I don't really want a strong Swissy. But I understand when money is leaving London, it's going to Swiss bank accounts. Because just think of it this way, it's leaving British banks going to Swiss banks. That's all that's happening. It's leaving German banks and going to Swiss banks. That's how I look at it. Okay. Oh, let's go back to the start. So Euro Swissy we did. Notice, look at that. Another great trade though, huh? It's just a good setup. I just have to, right? Here's your sell zone, right? It's just a swing, monthly swing. And here's the target. I mean, just sick. If you don't know how to swing trade, you're depriving yourself of your own destiny. I don't know why you fight it. Why you fight it? I mean, that is just sick. Oh my God. Lovely. Look at that. Just crazy. Thank you, swing trading. Euro Kiwi blew the doors off of it. Take a guess. Is this a swing trade? Now, the interesting thing is that entry creates this as a target. Oops. Let's do it this way. Okay. Creates this as the target. So the bajillion-dollar question now is, do you treat this as a breakout roll reversal? Remember, we call this a moo trade. The number one rule down here is never, 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 never buy. Never, 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 never buy. Now, you probably shouldn't sell either, but you certainly can sell, and that's a roll reversal. So that's a little trickier. But the interesting thing is that entry predicts that exit. Okay. Amazing. Gorgeous. Loufle. Okay. Is that crazy? Thank you, swing trading. I love you, swing trading. Euro pound. Okay, two pigs stuck in a mud. What do we want to do here? Nothing, thank you, pass. But there are trades, right? Would you agree that this looks more up than down up until really this last week? So we could do like insert channel, linear regression. Again, I'm going left to right, not up and down. So that's the math. So we'll leave it like that. So it was going up. So something's happened here, right? So let's take a look. Swing trade long, target, not quite. Swing trade long, target, not even close. Swing trade long, target, nice. Finally, probably got you out on all three. Pa-chow, 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 pa-ching, pa-ching, pa-ching. Swing trade long, target, nice, pa-ching. So even on this crappy euro pound, you still got 4 weeks in a row of moneymaker. This week, swing trade long, wah, wah, wah. But how about this? If you're a bear, this is your swing trade short, and there's your target. Huh. Okay. Oh, let's go back to the start. So, you want to trade for next week, yo? What do you think about something in there? And then I'm going to mark kind of this area. Okay? So how do you trade that, yo? Well, if you're a bear on this. Now, even though this all has valid trades, I don't think you could get me to trade this. But you might like this. Maybe you're in euro zone. Maybe you're in pound zone. Maybe that's where you live. Maybe you're trading or hedging or something. Okay, cool. You can play if you follow the rules of engagement. You can play good. Okay, but there should be something else going on, is all I'm saying. Well, right now, pound is strong because of the election, the new prime minister. But that could end pretty quickly. running in circles, chasing our tails. Oh, let's go back to the start. All right. Some profit taking. I wonder why there's profit taking. Could it be the profit zone? Could it be? Resistance, resistance. So there's a sell in there, but not this week. Running in circles. Aussie, Swissy. Wow. Yeah, I want to see this sort of turn itself around. It's not low enough, it's not high enough. I'm going to pass. That's interesting. So CAD is stronger than Aussie. So if you're going to trade this on this time frame, this is a sell zone in here. And you'd look for an up, down type scenario. I don't prefer commodity versus commodity though, typically. Yeah, look, this is a high here. So you got to really make a decision which one you want to go next. So on the bigger time frame, you see this is a little bit dangerous, right? I mean, really, you can be okay with that. I'm looking at it from an Aussie point of view, though, and I'm thinking it's just as likely to do something like this. I mean, right now it's sort of 50-50. So I suppose that's why I don't trade commodity versus commodity. But you can. You see the rules of engagement fit. Almost the exact same as the other pair. Well, Prince Philip, I'll let you know. 5% a month. So let's say 6% a month at the end of the year. Well, it's really 5.5, right? At the end of the year, you'll double your money. So at the end of 1 year, you'll have $2,000. At the end of 2 years, you'll have $4,000. At the end of, 3, you'll have 8. So keep doing it that way. Okay? If the stock market does between 5 and 10% a year, and you're trying to do more than 5 to 10% a month, you're mentally insane. So just think of it. If you made 5% a month, how long to turn $1,000 into $1 million? Just do the math. You don't even have to do the time value of money, right? Because really you would, if you're doing finance, for example, you would say, how you say in English? Well, if you do the present value of the $1 million, right, over 1 plus the interest rate to n, correct? But so then you'd have to do this differently. So to truly make $1 million, so we'll do that 1m is equal to the present value, and 1 equals the present value, are we going to do it times 1 plus I to the n? Is that right? Because if it took me 10 years, right, but there's some inflation, my $1 million now, the $1 million 10 years from now won't buy me the same amount of stuff as $1 million would buy me now. So I didn't actually make $1 million in present value. I might have only made, let's say, 900K, right? So you got to figure out the time value of money as well. But at least start with compound interest. So you can guess how long it would take to turn $1,000 into $1 million. Okay. What I would rather you do is figure out a way to get yourself, I don't know, 25K. Like, for example, if you could put together 5,000 US dollars, I can help fund you with the other 20. So now your account is $25,000. I can do that for you. Okay? And then you do the 5% a month. So at the end of 1 year you have 50,000. That's after 1 year. At the end of 2 years you have 100,000. At the end of 3 years you have 200,000. Right? You see what I mean? And all of a sudden you're moving a lot faster. Year 4, 400K. Year 5, 800K. Year 5.2, you have 1 million bucks. So to answer that question, if you can come up with 5 grand and I gave you another 20, and you did 5% a month on average, it would take you 5.2 years. But in present value, not in future value. So it would take you 6 years to earn what we call $1 million today. In the future, it'll end up being 1.3 million or something. You'll have 1.3 million, but if you had that future money because of inflation and stuff. Now, luckily, there's not much inflation. If we had 8% inflation, you're screwed because you never keep up with inflation. But at what point is this possible? You make 5% a month on average. Okay, 5% per month on average, right? Some months you make 10, some 10%, some months you make 1%. You never, ever have bloodbath losing months. If you lose more than 5%, you just robbed yourself of a year, for example. So if you can be extremely conservative and disciplined, which means all your trades are planned out and you only take trades when you're certain you're going to make money, not because you're afraid, but because you have solid trade plans and all that kind of stuff. So if you average it out and you're making 5%, cool, per month, and you never withdraw money from your account because you need the compounding properties, right? So that's it. And you need to be funded. You have to have starting capital. So that was based on 25,000 in capital, growing at 5% a month for 6 years. Now, if you think about that from a bond, in 6 years, you've only made 50%, right? Even less, right? But we're compounding. So you double your account and your lot size doubles. You double your account again, your lot size doubles again. Oh yeah, that's easy. Yeah, perennial, that's just money. Money is like the easiest thing, huh? So that's easy. I've done it multiple times for people. But I charge you I charge you $200 a month for the 20,000. The cool thing is you keep 100% of the profits. Okay? If you lose $5,000, the original five, if you drop below that original 5,000, somebody comes to your house and has a conversation with you. Okay. You say, hey, you want a trip to go see the sun setting over the sand dunes? Let me tell you, when you trade other people's money, when you do well, they're disappointed. When you do poorly, they hate your guts. No, that's me. Not Maverick, no. No, well, you should go through FX Bootcamp Live. Because I'll tell you, every person that's done it felt really confident in their skills and yet haven't been able to do it. So there's this disconnect between confidence and skills and then reality. So you got to go through live.fxbootcamp.com first and, go through a true boot camp. Mr. Connors, I'm a sick trader. Cool, man. All right. What do I want to do now? I'm done with Aussie. I did Kiwi. I did a lot of the euros and pounds and I guess yens. Let's do this one. Oh. Yeah, well, perennial legacy. If you do the boot camp at live.fxbootcamp.com, then not a problem. You're well on your way. But like I said, almost everybody has a disconnect between what they want and what they can do. And I'll tell you, most people wimp out because they can't do the work. It's not a skill issue at all. So anyways, here's that euro yen. It looks a lot like the euro dollar. Yeah, you'll get there. Okay, yeah, we'll do rand. I did euro rand. What else do you want? Wait, Wade. Dollar rand. Hey guys, let me ask you one more time. Open up that YouTube video. It's yesterday's video and leave a comment. Say hello, say thanks. Give me a currency pair you'd like me to cover in the future. Ask a question. But leave a comment, okay? It's important for our YouTube community. That's it. It keeps our community alive and relevant. So if you value our community, please leave a comment. Okay? It takes you what? 22 seconds? Would you please? Peso's not the right time. Next week, let's do peso. Okay, Miguel? next week, my friend. Okay, lots of sideways action here. Thank you, Prince Philip. The original gangsta. Kiwi Yen trying to prop itself above, probably with some futility involved, but it's trying. So kind of trying to stay above here. So I want to keep my eye on this next week. Yeah, Chuck Duck says he comments on most, if not all. Not all, but most, yeah. Yeah, it's amazing where 1,000 people will watch the video and 5 people will spend the 22 seconds it requires to leave a comment. It's actually pretty pathetic, if you think about it, right? This webinar has been going on for 1 hour and 11 minutes. It takes less than 1 minute to leave a comment, but 5 people will do it. So if you can leave comments every day, in fact, on the videos, it would be appreciated. So anyways, I'm going to watch Kiwi Yen right now as sort of a first go into a macro move, if a macro move develops. So I got to keep that in the back of my mind. Sort of a bull in the mine, a bull in a coal mine. And then this, of course, looks a lot less bullish as well. But again, it's set up for next month, maybe. So maybe it does something like this. Okay. Of course, I'm going to need oil to move up. Okay. And if WTI goes up, Brent will go up, and that Noki will roll over, right? Remember the Norwegian krona that we did, or kroner? Kenneth says done, right? I know what we can do. Let's do it this way. This might be fun. I have another, 10 minutes? 15 minutes maybe? 20 minutes maybe? I don't know. Let's do like 3 more currency pairs. I will take requests. Post your request for a currency pair or commodity here. Leave it as a comment. Okay, we will look at this. I'll pull it up. In a couple of minutes, I'll pull it up and I'll grab 2 or 3 suggestions from the comments of what currencies you want me to cover, and I'll cover them. Okay. Prince Philip, yes, they are dynamic levels of support and resistance. Rick asked what yesterday. Cool. I'll try to look at that. Okay. Dirk, ask it on that video. Dirk, post your questions here. I'm only going to do 2 or 3 more, and then we're going to call it a day. Remember, we got the Mueller report this afternoon, so be careful with that. So I'm going to the video now, refreshing. So today I suggest we cover Can we please have a quick look at settings? Okay. Where does it post the questions? There's no where's the comments? There we are. All right. Thank you, guys. Thank you, Eric. It is like Eric. It is actually pretty amazing if you think about it, right? Like, what was it? 2 days ago, I was on a beach with you guys. I could take you with me everywhere. Okay, we'll do one recent, and I'll do at least one from earlier, 3 minutes ago. Thank you, guys. Please leave more, okay? So we're only at like 36 comments. If 100 people left comments, that's still 90% of people leave no comment at all. More than 90%. If 100 comments are left, right? And of course, some of these, like Andrew Smart, is just leaving spam because he's trying to make the world a better place. This scum-sucking pig. There we go, gone. So, all right. So, anyways, thank you. This is great, guys. Thank you for doing this. Pound yen. Did I not? Yeah, I guess I didn't do pound yen. All right, let me do pound yen, and then I'll look at the comments again once I'm done with pound yen. So there's still time for you to leave your request. So let's pull up the beast here. Okay, where should I start? Well, the most important piece of information here is the move is done. So I don't know if you incorporate this type of information, but like at the beginning of the month, this is a very obvious sell. Just ridiculously straightforward, right? And based on that, this is the target area. So we hit that, it's done. So if you were a pound yen trader, you could have taken the rest of the month off. Notice where it reversed. I mean, very precise levels here, right? And then this week, look at the bottom, M2. So what's the target up here? The problem with that is we're still technically bearish. So now you get in this real problem of whatever's left over is sort of a mess. Okay, maybe you get something like that, but I think you could also run into a problem around here, okay? And you get this sort of, 50-50 scenario, because where you're supposed to make your money is on this trade, right? How many times have I told you to be ready at or just before the first day of the month? Like a gajillion, totally, completely a gajillion times. And so there's your trade if you're a bear. There's your target if you're a bear. Then you're no longer in the market, you're on vacation. And the people trading now are probably struggling to afford a vacation. Okay? So we got to be careful. It's not clear. It's not straightforward. It's still bearish. I suppose it's more clear to be a bear than a bull. Okay. Right? Down, 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 up, up, sell. Right? Down, 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 up, sell. I guess that's the most basic version of it. But I don't like doing that near this pivot zone. If we're doing this next week, I'll sell it this way, and I'm not even looking at this month's target. I'm looking at next month's target. Okay. And you might say, well, Wayne, what is next month's target? So I'd be looking at something like this. Okay. This whole area here is sort of done. Okay, done. So trading after the done is very difficult. And notice I wouldn't call this early in the month. So it's really not even certain you're going to get a counter trend. Okay. Hide. Cool. Let's do another one. Let me refresh. Euro yen. Well, I just did pound yen, so it's going to be the same thing. Aussie Swiss, Raymond, didn't I do it? I thought I did it. Hang on. I want to get one from yesterday. Thank you for the comments, guys. I really do appreciate it. CAD Swissy. I thought I did that one too. Are you sure, guys? I went through Swissy pairs. I didn't do CAD Swissy. I suppose it'd be very similar to Aussie Swissy, but we'll see. Oh. So I'm not saying no. I'm saying not now. So pound yen we did. Quality thing. Euro Aussie. Thought I did that one too. Euro. Well, we do. Mark says Euro Lira. I do that every day, and nothing changes, and it ends up being me saying, "Look, if you sold where you were supposed to sell, you'd have all this money now." And look, I made over 1,000%. But there's not much to do because of where we are. Right? So like back here, so I have Euro Turkish Lira. It's right here. I can look at it. We're double bottoming at the monthly target. So once again, you should be able to look at your chart and just say, oh, well, that's pretty much done for now. Okay. See what I mean? So there's not a lot to say, Mark, except, the trade I made 6 weeks ago was fantastic. There's not much to do today on that. Okay. Really, you should start planning out next month's trade plan on that Euro Lira. Also, we have an interest rate decision coming up, don't we? Erdogan fired his central banker, and now they're going to do some other crazy move on their currency. So we'll see. Although I don't understand how weakening their currency is going to help them. So, but maybe that's why they had to fire their central banker. So we have like Euro Aussie. There was like Aussie Swissy. So I did these, guys. Today I did them. CAD Swissy. A lot of commodity currencies versus Swiss franc. All right, well, we'll do that. All right, well, let's go back and do some Swissies again. Thank you. Let's go back to the Swissy setup. Okay, we had an Aussie Swissy, pound Swissy. So I guess what's happening is I do these things and all you see is what you're looking at. When I do these things, if I'm doing like CAD Swissy, it's not up here, but if I'm doing CAD Swissy, I just see Aussie Swissy. I just see it. They're the same thing. But anyways, let's get beyond that. Let's move this to an Aussie Swissy because that was requested. Okay, let's find an Aussie Swissy, Euro Swissy, Aussie Swissy. Okay, cool. Now Aussie's been strong lately, and Swiss franc is strong now. Do I want to trade these together? Mark says fired because they wouldn't lower their interest rate. Right, exactly. That's what I'm saying. That's weird, Peter. Most people get the email. Some people do not. I don't know why. But I am meeting with a programmer to rebuild that process. So hang on, okay? By the way, thank you for opening an account at Trader's Way. I appreciate your support. That tells Trader's Way, yo, 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 these webinars important. People value them. Okay? All right, so anyways, I look at this and I'm like, I don't know if I'd want to trade Aussie Swissy. But I guess you would do it to try to get the carry, right? So in that case, you need trade plans. So let's identify things like support. All right, let's say this is a support area, somewhere in here. Okay. Okay. So there's that. So if it comes down, now we're going to expect it to stay in that range, right? So over the course of the next 2 weeks, we'll develop a position that goes this way. And by that, you would catch a positive carry. Let's define that. If you are long and your leverage is 100 to 1. Now, in Europe, your leverage is 40 to 1. In the United States, it's 50 to 1. Okay. But if you elect to do 100 to 1 at Trader's Way, let's take a look. Aussie, Swissy. Okay. If you are long, right? If you are long and your leverage is 100 to 1, you'll earn 200% a year. If you are long in your leverage 50 to 1, you're going to earn 100% a year in interest payments. Cool. It's not bad. It's better than what your bank is paying you. Right? So to quantify this, if you put in a standard lot of 100,000, okay, you need $1,000 in collateral, in cash, right? So you leverage 100 to 1. You will earn 2.1% on your $100,000. So at the end of the year, you will earn $2,100 in interest payments. Okay? On your $1,000 investment. And then, of course, when you cash out, you get your $1,000 back. Okay? That's what that means. Isn't that nice? Interest only. This is just an interest. Interest. Now, if you make 100 pips profit, right? How much money do you make? $1,000. So this is equivalent to earning 200 pips a year. Okay. But if you're up 1,000 pips, you'll get $10,000 from the trade plus $2,000 in interest payments. So it really adds up, right? You can't control how many pips you make, but if you're in trades long term, you can control how much interest you earn if you pay attention to swap. Okay? So if you're trying to basically buy a 200% year bond, actually 210% a year bond, what you're doing is you're putting up $1,000 collateral, you're borrowing money from the Swiss National Bank, you lend those Swiss francs to Australia, Australia pays you 2%, Swiss franc, because of the negative interest rate, pays you 0.1, and you got yourself a little bond. Once you're up, let's say 25, 50, 100 pips profit, move your stop to break even, and now you're sitting on a bond. That's it. You're just sitting on a bond. And at the end of the year, you say, oh my God, I'm up 1,200 pips. Then you've turned your $1,000 into $12,000. Good job. If at the end of 1 year you get knocked out and you're in zero on the pips, well, at least you've turned your 1,000 right into 3,000, right? But whatever. Oh, if you trade one standard lot with $500, you're mentally deranged. Okay, Jay? And I know you're asking a hypothetical question, but people that do that don't even understand the math of money. So by definition, it's almost built-in poverty, right? You don't have an understanding of how money works. So people that understand money, they understand that time makes them rich. But that's because they buy houses that appreciate in value over 30 years. They have a stock market portfolio that grows over 30 years. They have bonds, right? And they own some real estate, an apartment building, which means they have to go to a bank and have good credit, and they borrow $3 million in it, right? And it costs them 5% a year, but they're collecting a net cap of 8%. So that pays for that. So they put 3% in their pocket, but it's paying for itself. And after 25 years, they don't owe the $3 million anymore. And so they were living off the $2,000 profit month after month after month. But 20 years later, they don't owe the $3 million anymore. Then they sell the property for $6 million, and now they have $6 million that they couldn't spend for 20 years, but now it's in their retirement account, and they're old and they're not working. But they have a stock market portfolio, they have a bond market portfolio, they own their own house, which has doubled in value. They borrowed money from a bank to buy some real estate, that produces income. And of course, this is all a relatively sophisticated scenario. It's not that sophisticated, but this is what people that understand money do. And they understand the secret to all of this is time. Time and credit and, just a basic knowledge of money. People that don't understand that, they want to get rich quick. And again, I'm not saying that that's you, Jay, but when someone says, well, I don't have any money, but I want to risk it all to get rich, that thought process tells me you don't understand money. Okay? And again, I'm not shaming you or something. Don't get upset at me. All right? People that think that way do not have a basic comprehension of how money works. Val, send me another one, Val. I am really sorry, and I know this sounds like a cop-out, but I get a lot of email every single day, ridiculous amounts. So if I've missed it, I really do apologize. I just took a little mini vacation with my family, who I hadn't seen for a month because I was at Harvard, and, working 18, 20-hour days at Harvard. So, like, if it slipped through, I'm not saying you're not important. I'm just saying I'm sorry. Email me again, and I will do my best to respond. Okay? Jay Mills says you got to wait till you're old. Well, let's. I think you need a few skills. I'm not saying you, everybody. We all need a few skills. We need to be somewhat intelligent. Okay? Then we have to have a ridiculous, sickening work ethic. And then third is, yes, you need patience. Okay? So degenerate gamblers do not get rich. Lazy people do not get rich. Okay? And most of the people I know that are really rich, they're pretty smart. I mean, but like I know many people that have more than a B in their account, like billions, right? These are intelligent, hardworking people with long-term visions. The poor people I know are the opposite of all of that, right? So those are the requirements, right? So when you come in, you're like, I only have $500, there's a red flag there. And I'm trading one standard lot. Is that too much? Another red flag. Okay. So I'm saying you want to get rich slow. You want to invest in your education. You want to take the long-term view. You want to trade like a business, right? Trading like a business requires long-term vision and a ridiculous, sickening work ethic, right? So it's not that it's slow, it's that it's realistic. So like one of the first things I did is I created a 3-year pro forma cash flow statement. To model my business, my Forex business. This is something I did 18 years ago. Okay, so that I could at least look at the business mathematically. Do you understand? Mathematically, because when you do it this way with an Excel spreadsheet, and you're doing stuff like this, it tells you the way that the money works, where the risk lies, and all this kind of stuff, right? That's what I did 18 years ago, and realized from that I'm over leveraged. I realized the power of compound interest. I found paradoxes, like the less I paid myself, the more money I made, and all these really interesting things, right? So again, I'm taking myself, what I did 18 years ago, to analyze the business opportunity in front of me, because I was venture capitalist. I'm an entrepreneur. I always have business plans. I always need to know. I'm always measuring and all that kind of stuff. So that's where I was 18 years ago to create essentially a business model for my Forex trading business, right? Right? These are like small little steps that I think any successful business in any industry needs to do. So if you're skipping things like this, you're like, I don't know how the market works because I don't like fundamentals. I'm not saying this is you, but I'm giving like a hypothetical person, right? I'm not good with math or numbers. I don't really like, I don't want to figure out how to do a 3-year cash flow analysis. That seems like over the top. Well, when I hear things like that, that says, for example, does not have a ridiculous, sickening work ethic, right? When I hear something like that, it doesn't say this person definitely does have a ridiculous, sickening work ethic. It says, well, that seems over the top. I don't really want to do that. I'm not really good, right? All of a sudden, it's just like I'm hearing excuses not to do the work. And yet I preach every day, you should look for excuses to do the work. You should be inquisitive. How does central banking work? How does how does commercial banking work? I should take a class on microeconomics. I should take a class on macroeconomics. I didn't say 5 years ago now, going back to Harvard's too difficult. I said, hey man, I got 20 years of more than that, right? I'm doing all right for my age, right? Right? I have kids and all these different things, but I never said going to Harvard would be too much time, too much difficult. I don't know what the hell just happened. So I'm looking for reasons to do more. So maybe I'm not the best example in the entire world. I'm not saying that either, but I'm saying I do believe you have to have some level of intellect, you have to be ridiculous and sickening in the amount of work you're willing to make and the sacrifices you put toward this, because, this is not an easy gig, but it's easier than opening up a restaurant. Okay, and all that kind of stuff. And I want you to look at this as truly a business. Not, how can I flip some Forex trades so I can buy a yellow Lamborghini? Well, that's not a business. That doesn't happen. It's a hell of a dream, though. It's a hell of a dream. Okay? So, again, I'm not beating you down, Jay. I'm just saying, whoa, 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 whoa. You're not looking at it from the right point of view. That's my message, Jay. You say, well, like, what was my message earlier? Take whatever capital you have in your account and say, I am going to make 5% a month. Okay? I'm going to make 5% a month. If you're doing more than 5% a month, then your alpha better match your beta. What is alpha? This way? Alpha better equal the beta. Okay? And again, if you don't know what that means, it's another sort of red flag, like, hey, you still got things to learn, which is really cool. And that there's a ways to go, that this is all part of your growth, right? That you can do this, and it's interesting and it's exciting, right? But it's all part of it. But on the average, if you can get the 5% a month, how long will it take you to hit your financial goals? That's not even pro forma cash flow statement level analysis if you're growing at 5% a month. Right? So if you're losing negative 12% in a month, you're failing in ridiculous ways. And you might say, oh, well, it's only 12%, and next month I'll make 36%. These are fails on massive levels. Your worst month maybe should be 3%. Okay? A great month should be 7%. Okay? Now, you might laugh at me when I say that, but you're not thinking about it properly. If you lost 12% a month, you will never raise money from an investor. Never. You will be laughed out of the office. Laughed out of the office. There's no sophisticated investor on this planet, right, that would invest into you. So you got to say, well, I got to be conservative because I don't want to be over risk, because I don't want to have a negative 12. So I got to lower my risk. I got to have maybe a cutoff point at -3, and I'm trying to make 5, but some months are better than others. So some months I might have +2. Other months I might have +8. Whatever, that's cool. It'll all average out based on seasonality and stuff like that. And you do this slow growth year after year after year after year. Now, the market over that period of time will be very inconsistent. Aussie Swiss will go down, then it'll go back up, and then it'll go back down. For years, it'll do all kinds of things for all kinds of different ways. But your results are slow and steady, slow and steady, slow and steady. They can count on you to provide stability in an unstable world. But that's why people pay you money. You have to understand that. You don't tell a rich person that you take on a lot of risk so that they can get rich. They're like, dude, I'm already rich. Someone that says this is trying to get rich themselves, but you'll never convince, right? Poor people don't convince rich people to, right? So what you have to say is, I can manage your money in a world of chaos and instability. The one thing in this planet you can count on is that year after year after year after year, I have steady returns. You see what I mean? So then you say, well, Wayne, at the end of the month or at the end of the year, I'm only making $500 because I only started with $500. Well, that doesn't have anything to do with your trading. The market doesn't move differently if you have 0.0001 lots or 10 lots. The market doesn't behave any different. It doesn't see the 10 lots. It doesn't see your micro lot. That's all irrelevant. So you say, well, Wayne, so how do I make real money? I want to make $50,000 a month. Okay, well, bust out the math and start over again. What is your starting account size? Is it 500 or is it 50,000? The problem is, right? Well, so anyway, so what you need to do is, well, okay, the problem is at the end of the year, if you spent everything you made, you would earn $5,000 a month. And you're like, well, that's my goal. Well, what if you spent nothing for 3 years? 50,000 turns into 100K, turns into 200K. Okay? And now you're on your way to a $200,000 a year as it grows to 400. So what's 200,000 divided by 12? Well, let's say, right, 20K. It's a little less, a little more, but whatever. So now you were trying to make 5,000, but you're making 20,000 a month. Why? Because you let your account size grow. So when you do the math, the market doesn't shift, right? It's someone that doesn't know what they're doing increases risk, but we've already discussed how that's definitely the wrong thing. So the reward now is to do it for years and years and years steadily, and then get someone to invest or grow your account size yourself. Start with 5K and grow it to 10, then grow it to 20, then grow it to 40, then grow it to 80. And you're like, like if you do the math, how about this, guys? What if you knew, if you just did what I'm talking about, a specific, measurable, attainable, realistic, and timely goal of 5% a month. And you knew for a fact, if you did that for 10 years, all your money, oh, not 10%, sorry, 10 years, you knew that just mathematically, that you will not have any more money problems the rest of your life, nor will your children, nor will your mom and dad. Okay? So like Jay Mills says, I only want 40 or 50 a day. So again, you're not thinking about it right. Okay? You're not thinking about what you have a $2 million a year job in front of you, and you want to make $50 a day. You're not on the right planet, right? That gets you a cheap bottle of wine every day, right? You need to think bigger than this. You need to think about multi-million-dollar career. Now, let's say you want to work at Goldman Sachs and make $2 million a year. Well, you better go to an Ivy League school. You're like, well, I'm not smart enough for that. Well, then fix that problem. Go on edX, get an education for free. Fix the problem. It's only going to take you 5 years. Get over it. Then what? Then you need a master's degree. Well, then take some advanced college classes. Take advanced classes. Again, I think on edX, I took a course from the International Monetary Fund. It's free. Get over it, right? And then what? And then you need to have some sort of skill that you can apply for years and be attractive to a company like Goldman Sachs. So, go to Harvard for 6 years and then go work at Goldman Sachs. That's what they do. Everybody knows that's the path, right? And yet some people will say, well, I'm too poor for that. I'm not from the right neighborhood. My dad doesn't have the right last name. I'm the wrong color. I'm the wrong religion. It's ginormous sob stories. Okay? By the way, 70% of people at Harvard are on financial aid. And there are plenty of people from different religions, different cultures, different races. Harvard is incredibly diverse. So all of that is sob story, right? But what can you do if you are honestly in that situation? Well, if you got a computer and a laptop, you can get a college education. It's not a problem, right? You can learn Forex. You can take you can attend all my webinars every day. You can pay for some of the courses at FX Bootcamp. But if you had done the math and knew that all your money troubles, under your definition today, because this will always change, is only 10 years away. 10 years away. And all you have to do with patience and discipline and a ridiculous, sickening work ethic to achieve it, 5% a month. And maybe all you got is $500. Then great. Then do that 5% a month with your $5, with your $500, right? You're like, dude, Wayne, that's like $5 a month. Well, you have two choices now as a professional trader. Increase your assets under management, which means convince someone with excess money to give you the money to trade. Or grow your own trading account, which is just a matter of time if you're as good as you think you are. So it's either more money under management or more time. But the lovely thing is, you probably have time. That's what I'm saying. You're like the luckiest person in the world. And it's only going to take you 10 years. Are you kidding me? Walk around your neighborhood and say, hey, what if you could radically change your life beyond your wildest dreams, but you had to work really hard for 10 years? That's nothing, yo, right? Like, what a liberating thing. Like, oh my God, it will only take me 10 years of blood, sweat, and tears. And I will get out of this place and go where my dreams are and then drive to something unthinkable, unfathomable in today's world. But I'll tell you what, 99.99% of people won't do it. And that is the problem. And Jimbo's like, yeah, I'm 72, right? Well, then, yeah. Sorry, Jimbo. Yeah. But like, right? So it's a mindset, right? You see what I mean? It's a mindset. Right? It's a mindset. You need to be the person that says, oh my God, it's only going to take me 10 years. If you've had children before, you know that they go from little toddlers to 10-year-olds in a blink of an eye. I've been at Harvard now for 6 years. I told you guys when I signed up for it, for the right? It's going to go by fast. It's gone by fast. I only have a year left and it's all over. I have multiple degrees with awesome grades. I'm graduating with honors, which means I'm putting in the ridiculous, sickening work ethic that I got. Well, I've had it forever, but that I applied to Forex as well as, and then I'm going to go on and do other things too. Like, this is great. And it only was like, once I got into the program, it was only 4 years and more money than a swimming pool costs. You want a yellow Lamborghini? Get a Harvard degree. There's my yellow Lamborghini right there, hanging on the wall above my, there it is. There's my yellow Lamborghini. I'm trying to point, right? What does that mean? I value education. I value the challenge of being the best. I enjoy the growth. I enjoy the focus, right? That's all it is, guys. You should say, oh my God, I found what I want to do the rest of my life, and I am going to strive for excellence and mastery. I will become the best foreign exchange trader on the planet, and I'm going to show my trade history to somebody 10 years from now, and they will be flabbergasted, and it will be their honor to invest into my Forex trading business. But that's all you have to think. And then you have to do it. And you have to make the sacrifices. To me, that's easy. Right? That's what I mean. You tell me that, it's easy. When someone told me 95% of people fail at Forex, I'm like, oh my God, that's it? I only have to beat 95%? Back when I'm doing venture capital stuff, or back when I was an entrepreneur, it was 99.9% of people failed. Now 5% of people fail? I just have to beat the other 95? Oh, I got that. That's it? 95% of people suck. They don't try hard. They don't show up. They don't do the work. That's easy. Macroeconomics, yes. I'm doing one on, it's a graduate degree in financial management and finance. Okay? But I'm doing all that Harvard stuff to be an example to my children as they are growing up. That's how ridiculous I am. Right? I love being ridiculous. So I'm not beating anybody down. I'm not picking on Jay Millsberg. I'm trying to say, in my own uplifting way, maybe it sounds negative. I'm really not trying to be negative. I'm trying to say, you need to recognize what is in front of you. $50 a day, you're not looking at it right. You don't see it. You're looking at the woman in the yellow dress, and I'm looking at the matrix. And I'm trying to get you to see the matrix too. Right? I want you to say one day, maybe it's not today, maybe it's in a week, maybe it's in a month, maybe it's next year, you're hanging in one of my webinars and I say something and all of a sudden you see it. And you're like, oh my God, I'm staring at a multi-million-dollar a year business. I need to start building this now. That's where you need to get quick. You're not going to get rich quick. You need to say, I want to start my multi-million-dollar business today, right this second, starting now. And you start the math and say, well, where am I going to be in 10 years? Do the math. You got X amount now, growing at whatever percent, right, per month. Get out of compound interest. calculator and start doing the work. Okay? It took me probably a week to do my 3-year performance cash flow statement. I believe I talked about it in the book. I'm not sure. But I have told many people many times on many occasions that it was the most important thing I've ever done in my Forex trading career, was to do it so that the math showed me the power. And I said, oh my God. And I saw the paradox, which is sort of like the matrix. You're like, oh my God, right? You're just like, oh my God, if something was revealed to me, a paradox. So the less I pay myself, the more money I made. I'm like, oh my God, that's so important. And then where I'd be year 1, year 2, year 3, and then I looked at it, I'm like, oh my God, I'm way over leveraged. So I started lowering my leverage and lot size, and how does this grow and how does that grow? And I'm playing with it, and I was learning so many important lessons that nobody on this planet would have told me, because there wasn't any other people on the planet telling me. And I bet you there's still not people that are showing you the real stuff, right? I'm asking you to do the math so you understand. And then when I lowered my lot size based on the math, the 3-year performance cash flow statement, another thing occurred to me. Every day is boring. I never have to go big. There's never, all of a sudden, like, so much stress just dissipated into the universe. And I'm like, oh, this is such an awesome business. That's what I'm telling you, Jay Millsberg. $50 a day. You're not even shooting at rabbits. You're digging up worms that some people might put on a fish hook. You're eating the worms. I'm like, no. Put the worms on a hook. Get a fish. And then take the fish. Get a bigger fish. Get that fish. Shoot a bear. I mean, it gets better, man. It gets so much better. So I'm just trying to inspire you to look at it from a completely different point of view. That's all. I want you to succeed. Right? Remiss says, yes, you did talk about it in the book, and you realize risking too much. Yeah, I remember I at the end of 3 years, I was going to make $100 billion a year or something. I'm like, that's even more than what I need. Right? So anyways, I got to go, yo. Thank you for the comments you left. If there are any more comments, if you hated the speech I just gave you, if you loved the speech I gave, tell me. Leave it there. Tell me I'm doing a good job, that you like these webinars and you want me to keep doing them. Oh. Yeah, Jonty, it could be true. Right? It could be true. So you need to find out how you can speed that up. Right? But, Jonty, there are so many resources out there now that I'm absolutely convinced that it won't take you 10 years. There's no way to get good. Right? Okay? But yes, what I am saying is it will take you time. How many other, I don't know, trading gurus are out there with the pitch that it's going to take you a minimum of 10 years? Right? How many? None. Okay? That's all. So, peace on earth. May the pips be with you. May your profits be above average. And I will see you tomorrow. Be careful during the Mueller testimonies today. Thank you for being on my team. Thank you for being a client of Traders Way. And if you are new to these webinars, please visit tradersway.com and open an account today, okay?